My name is John Rowland, Bar Chart's Head of Trading Education. Welcome back to another episode of Rowland's Trading Roundup, where you can better learn about the features and tools that Bar Chart has to offer. If you're new here, hit the subscribe button to get alerted anytime we upload a new video. Before we jump in, please take a moment to pause the video and read this important disclaimer in full. Any decision to buy, sell, hold, or trade any investment involves risk and are best made on the advice of a qualified financial professional. Today's subject, how to tell if we're in a bear market. Now, did you know that there have only been two corrections of 20% in the last 5 years? Now, though technicians generally define a bear market as prices falling greater than 15 or 20% from a recent high or an all-time high, both of these corrections that happened in the last 5 years were very short in time and very swift in volatility. Matter of fact, you have to go back over a decade to find a true bear market of price decline and time span. So, what is a bear market? Now, Robert Ray, in his book, defines it as a primary bear markets are long downward price movements interrupted by occasional rallies that continues until price is discounted. The worst is apt to occur. Now let's read this again. Extended downward price action with corrective counter bull moves that continues until the market discounts everything. In other words, bear markets end only after market prices fall below a line of value. And Ray went on to characterize bear markets in 3 phases. Abandonment of hope, selling due to decreased earnings, and distress selling. So what is Ray telling us with these 3 different phrases? So first, abandonment of hope. What he's really saying here is this transition of markets from bull uptrends to bear downtrends, and the strategies that bull markets use, particularly buying dips, fails as the market transitions from these uptrends to downtrends. But today's market scholars or technicians will call this phase where stock ownership is distributed from those who know to those who don't know. In other words, from institutions to speculation, as the distribution phase. As markets move from bulls to bears, as stocks transfer hands from the institutions to the general public. Phase 2 is our selling due to decrease earnings. Now, what we're happening here is we're seen a change in momentum, a change in sentiment, or the overall expectations of prices, or a lack of appreciation of prices, an increase of pessimism, right? The beginning of fear and anxiety. Plus, what we'll hear is from our corporations, in our corporate earnings, a warning of headwinds, or you'll hear something like shrinking margins. But from a technical standpoint, right, we'll move from charts that look like heads and shoulders or double tops, where trends are now turning to the downside. And this is called this continuation of our downtrends, a series of lower lows and lower highs. Now, there is a difference between a bear market, which is a primary downtrend, big picture, and a downtrend. Now, a downtrend does not necessarily define a bear market, but if a downtrend does start to move in favor of our moving averages turning negative, And this is a confirmation of something bigger is going on. So the two classic moving averages that investors look at in the stock market in determining these bigger time frames is the 50-day and the 200-day. But some old-time stock investors will talk about a 30-week moving average. Try it out and see if you think it works. But a 30-week moving average is similar to a 200-day moving average. So phase 2 is the trending phase. Lower highs, lower lows in our higher time frames. And then phase 3 is our distress selling. And here what we're going to find is that price deviates from the declining moving averages. Fear, panic fills our traders' hearts. But typically there is some sort of liquidation or a major risk-off element as capital is withdrawn from the market. Selling accelerates as investors fear the worst is yet to come, and some are forced to liquidate their positions. Maybe you've heard the expression, throwing the baby out with the bathwater, or in classical aspects, if I ask somebody, a man on the street, what is a bear market, most folks would say this part of a bear market, that crash, right? That final leg of a bear, right? A disregard of value, right? Sometimes you'll hear folks are having to sell winners to pay for losers. That capitulation. I hope this video was informative. If you enjoyed today's content, make sure you subscribe to our channel and give this video a thumbs up. Until next time, the good of all trading.